Hey everybody, it's the Stable Lad coming at you with another weekly update on what I've updated in my own portfolio this week, as well as just some of the things I'm thinking about in terms of stablecoin yield. So the point of these videos and what you'll get out of these videos is I'm just going to show you my screen, what I'm looking at. I'll talk about through some of the risk framework that I think about, and we'll see exactly what I'm deploying capital into in terms of my stablecoin portfolio. And I'll share with you some of the updates I made this week. So if you've been following along, you'll kind of catch right up and you'll know exactly what I've been talking about. If you are new here today and this is the first time you're checking out one of these videos, what you'll see is just what I'm investing in, what I'm looking at, some of the things I decided those APYs are dried up, or I'm not understanding how rewards are paid out or whatever it is. So this is just a good summary of what I'm doing on a weekly basis and looking through my portfolio. So the first thing actually I'd like to take a look at is here's the portfolio and just the basic of the portfolio. And you can see how, for those of you who are new here, I've spread it out quite a bit. This is a large portfolio. My goal is capital preservation first and then APY second. So I have a really diversified portfolio with a lot of different holdings in which I diversify everything so that no one position is going to crush me. So even if I lose on one position, which I have, this one right here, this XY Ethereum on Zero Lend, I put in a very small amount, $208 in this thing, and it's not gone forever. I might actually be able to get it at some point, but probably not. And it's such a small, it's under 1% of this public portfolio that I share, and so if I'm getting, I don't know, 18, 17, 16% APY for the year, I've only lost 1% on this one bad deal. And that's why I spread things out the way I do. What I wanted to show, what I just kind of been looking at, I've just been looking at the portfolio in general. The two best blockchains that I've found the most success with that I feel have a good mix of, you could see here, low, medium, and high risk positions, so a good spread, a good portfolio balance, and is paying me the highest amount. There's nothing in Arbitrum right now that's paying me under 10%, and this is updated as of this week. So Arbitrum is really both a balanced place for me to invest in right now, and it's having phenomenal APY on that chain, and I expect that to continue to grow as DeFi continues to expand and as the bull market continues to go on. So I'm looking at deploying more capital over on Arbitrum, and you can see here base is fine. It's okay. I've got one position under 10% here, or two positions under 10% here, but you can see like there's just a few here. There's not much that interesting going on base. I expect it to change. I think base will do just fine, but right now Arbitrum is clearly, for me, it's winning right now in terms of a balanced portfolio that's paying really well. And the other one that's paying really, really well and also balanced is Avalanche. Avalanche has a ton of great stuff going on. We've got low, medium, high, very high risk here on this. So a nice blend on this chain. I had one position here that dropped from, I don't know, something like 13% to about 5 and a little under 5.5%. And so I switched that up, and I'll show you what I did. But the rest of the chain is paying really, really well. So I have this cash sitting here undeployed, and I've been sort of mulling over what I wanted to do with that. And I think what I'll probably end up doing is putting a lot more over on Avalanche and on Arbitrum, but I still haven't fully decided yet. I might deploy a little bit of capital over to base and maybe even some over to Solana. Solana is just a younger chain for me and has a lot less maturity from their DeFi, even though it has some really, really cool stuff going on there. I don't feel that it has the same sort of balance that both Avalanche and Arbitrum are offering right now. And so with that being said, I just want to show you all what I did here. So I had here this position here. I had this RE7 Labs cluster on Euler. This is the Euler protocol, and it was earning me something like 13% last week, and we had extra wrapped AVAX rewards here. You can see the 2.48%, and it was paying a lot last week, and the APY dried up, probably just a ton of people piling into this pool, and in the APY dried up. I could see this thing reversing and going back up to 10% next week. That's how these things often work. People rotate their capital from this to another one. That's exactly what I did. I took the 10% of the, or 5% of the portfolio that I had in this position, and I moved it over here to this position in this USDT cluster. And I just wanted to show you how kind of cool this is with Euler. So with Euler, you can take, and you can do this on Aave and a bunch of others too, but Euler does it really, really cleverly here. So you just take this, you click on this, you go to Asset Swap, and then here you could take it and you can just swap it for any, basically any other stablecoin. You could actually do any other product that they offer here, but I just basically took it from this, the USD cluster that I had it in, which is I think this one here. Oh no, it's this one, and I moved it into the current one that I've got here. Just did a quick swap, all from within Euler. It was really, really really good sort of low slippage tolerance, and the balance moved over really, really quickly and easily. And I really had it was a good user experience, which is just another reason why I really like Euler. Let's take a quick pause. If you'd like a simple reference guide that shows you how I think about building a stablecoin portfolio, from risk tiers to position sizing, and even how insurance fits in, I put together a free guide you can download. It's the same framework that I use myself, designed to keep things steady and easy to follow at a glance. The link's right below this video. Grab the guide, and while you're there, make sure you're subscribed so you don't miss the weekly updates I share on how I'm adjusting my own portfolio. All right, let's get back to it. Over here, I had a really small position on this decentralized exchange on Avalanche called BlackHole. And the number one exchange on on Avalanche for years was Trader Joe since it launched during the last bull market. I think it launched in 2021, maybe early 2022. But BlackHole's kind of quickly taken up the number one spot because they're paying a lot of rewards, and so I thought I'd decide to try this stablecoin pool here. It said it was paying 22.4342% for USDT and USDC stablecoin pool. I put it in there. I never really saw great rewards coming from it. I felt like this APR that it was talking about here was never really what I was actually getting from it. And then the stablecoin pool went out of range, and I stopped earning rewards anyway. So I thought, I'm just going to move it from this. I found on Trader Joe, which, like I said, was the number one decentralized exchange on the Avalanche blockchain for years. They've done some really, really cool things, and they've changed their name to LFJ, and done a sort of rebrand and added a bunch of interesting things: token mills, trenches, all kinds of weird stuff. But I found this really this decent pool here of Agora's AUSD, which is a medium risk stablecoin for me. It's backed by treasuries and cash, so it's got that sort of traditional USDC, USDT type of reserve setup, which I really like, and then USDT. And so I just put a small position here in this pool, and right now it's paying 23.85%. And so I'm just going to watch that. I'm going to see if it's really paying those rewards, and we'll kind of watch it on a weekly basis to make sure that that's exactly what I'm getting here. But I like moving it from a high risk kind of position on BlackHole, which was a new decentralized exchange, a new DEX, and moving it over to a medium risk DEX that's got a lot more history, a lot more experience. If they've weathered the bull market and the bear market really well, and so I feel really happy about making this move. And in terms of APY, it says it's the same, but we'll see. I might even be paid more on this one. On Avalanche, also, I just took a look. My APY has sort of gone a little bit lower on this USD position, but you could see it's a really small position. It was just kind of like the leftover cash I had on Avalanche. So this is a kind of low risk play for me on Avalanche. I could swap it and move it into USDT for another percentage. But what tends to happen with these pools, right, is you see like 1% higher, and people start swapping from this pool to this pool. And then all of a sudden you look a week later and USDT is paying 8% and USDC is now paying 9%. And so sometimes it's best to just kind of leave it sitting there for a little bit and just see what happens. So I'm taking a note that USDC is paying a percentage less than USDT. If that stays for another week and it's consistent and USDT is just consistently paying higher, I'm just going to swap it right here, and then I'll swap it to USDT position. and make the percentage higher. But for now, I'm just going to let it sit and just watch. Sometimes it's fine. Just let it sit and it sort of balances itself out. One of the newer positions that I moved into, which I really like, is on Harvest protocol. Harvest is a medium, kind of mid-risk protocol for me, and has this really nice autopilot position on Arbitrum. It's paying 17.71 APY currently, and we're going to play around with this and see how well the rewards are, and see how sort of consistent this is. It's not populating here for me, but we're going to see how consistent that is. Apologies for it's not popping up here, but that's one of the new positions, 17.71%. Another thing I've been kind of looking at and just sort of mulling over is on Pendle Finance. Pendle Finance is a great protocol, and what they do, which is really cool and unique, is they separate yield, like sort of volatile yield from a fixed yield position. And so you can see here I just categorized by best fixed APY, which means this is fixed APY. This is exactly what they're paying. What they say here is what you're going to get. And they've got two different markets here that look really interesting. So Yo USD and Resolve's USR. These are two higher risk stablecoins for me. So I'm only going to, if I do this, I would only do a small percentage. 2.5% would be what I would hold on each of these stablecoins. That's the max I would hold of these stablecoins because they're kind of newer and more higher risk for me. But I think I would play with a small percentage. So 2.5 risk, again, 2.5%. If you had a $10,000 portfolio, stablecoin portfolio, $250 would be the most that you would hold in these stablecoins if you're using my framework. So for me, that's what I would do. If the public stablecoin portfolio that I share here is got 20,000 in it, so $500 is the most I would hold on Yo USD, and then $500 is the most I'd hold on USR. But these are nice positions. It's fixed 18.9% and fixed 18.69%, and a fixed rate of 16.15%. So I really like what I'm seeing in this pool. I took a look at some of the other pools on different chains, on like Arbitrum, for example. Here you can take a look at Arbitrum, the best fixed yield here. I'm not seeing a ton of stuff. I do like this USD AI. This is another kind of high risk play for me. USD AI is the first stablecoin that is tied to compute. So like they actually like trying to kind of support the AI compute building world here. So like that's how they keep their peg with AI, and that's kind of really interesting and cool. But that's again another high risk play for me. So I might do something like this on Arbitrum where I'm making a fixed 23.78%, and the rest was just okay. And I guess it's maybe a good time to point out that there's some really incredible yields on Ethereum right now, and we could take a look here. We can just take a look at Ethereum, and you can see yields. There's tons that have really high quality percentages and a lot of depth in terms of its TVL. So this is 4.21 million. You've got another one 46 million here in this one, and these are all like this is like fixed on Pendle, right? These are good. These are really interesting things. But I've moved mostly away from Ethereum during this bull run because the fees have gotten out of control, which is what happens when Ethereum gets a lot of usage and the blockchain gets a little bit more congested. Gas fees go up and the fees become prohibitive unless you have a really, really large portfolio. So a $20,000 portfolio for me, which is what I'm sharing publicly today, which is right. This is my publicly facing kind of portfolio. It's only 20,000, and so 20,000 is just too little to put on Ethereum for me. So while I have other portfolios that have that I use Ethereum a lot on, I'm not focusing on it at all within this portfolio because those fees eat up the APY. I just had one more position that I moved a couple of weeks ago on Ethereum, and just moving it out of the position ate up almost the entire APY that I earned, which was a really healthy APY. So most of this portfolio follows Base, Arbitrum, some on Polygon, which I haven't seen a lot of success with. I've just deployed a couple weeks ago to Solana, and I've just deployed a couple weeks ago to Avalanche. And I'm seeing there is what I really, really like. And so that's probably what I'll be sharing more of is when I take this cash and I deploy it, it'll probably be a little bit more Base, a little bit more Arbitrum, maybe some Solana, but definitely some Avalanche and definitely Arbitrum on there. So this is this week's update. We've kind of looked through here what I'm seeing here. Nothing under 10% APY on Arbitrum. This is a really nice, decently balanced portfolio, and we're probably making 15% here as an average. And then Avalanche is a little bit maybe less than that, but still a nicely balanced portfolio. We got some really high yield on some of these things. I'm taking a little bit more risk. We've got some, a little bit more high risk stuff going on Avalanche, but that's okay. If we take a look at my sort of portfolio blend here, I've got way more room to play with on the low risk side of the portfolio. My medium risk stuff is kind of maxed out here, and I've got some, almost 10% to play with on the high risk side. So I've got more wiggle room here. And just to sort of summarize, low risk makes up generally 50% of my portfolio. Medium risk makes up 30%, and high risk makes up 20%. And this is a sort of blend of the modern portfolio theory and the Half-Kelly criterion that I think is a really good balance for a stablecoin portfolio. So that's it for this week. Right now, portfolio is on track to make 13.19% this year. I think as the bull market carries on, we'll see much higher percentages in future videos. So I'm expecting to see this year maybe making upwards of 15-16% for the year. In bear markets, we'll make less. Bull markets will make more, but we got to take advantage of it when the markets are hot, which it is right now. So it just sort of continues to heat up as stablecoins continue to heat up. That's the weekly update this week. I hope this was informative. Please leave comments and questions. If you like this video, please subscribe. Please hit that bell. I'd love to hear comments on how I'm doing. If I'm providing you with great value, I'd love to hear that. If I can improve on things, I'd love to hear that. And if there's specific things you want me to cover, I do take those into consideration, and I will cover those in future videos. So until next time, I'm the Stable Lad. I'm the Stable Lad. And if you like today's video, please hit that subscribe button. Every week I break down what's happening in the world of stablecoins and why it matters, clearly, calmly, and without the hype. This channel is for educational purposes. It is not meant to be financial advice. So always do your own research and manage your risk wisely.